Welcome back to Formula TV. Have you ever wondered what banks actually do with your money and how they manage to stay in business? It's a fundamental concept for understanding the economy. We're going to break down the core functions of banking and their key revenue streams in a simple 4-minute overview. Remember to subscribe and keep on watching. The most important role of a bank is as a financial intermediary. They act as a bridge between two groups of people, those who have extra money and those who need to borrow money. Which brings us to our subcategories: the bank's borrowing actions and the bank's lending actions. Accepting deposits is the bank's way of borrowing money. Banks take in money from customers who deposit it into checking and savings accounts. To the bank, these deposits are liabilities, money that they owe back to the customer. They pay a small amount of interest on savings accounts, essentially borrowing this money from you at a low rate. As it relates to the bank's lending operations, the vast majority of the money deposited is then pooled and lent out as loans. Think of things like mortgages, auto loans, and business loans. To the bank, these loans are assets, money that is owed to them. They charge a much higher rate of interest on these loans to the borrower. The difference between the two is profit. The genius of the model is that the interest rate the bank charges on loans is significantly higher than the interest rate it pays on their deposits. As it relates to their primary revenue stream, this is called net interest margin. The most significant way for banks to earn money is through the net interest margin, NIM. And this is simply the difference or the spread between the interest income a bank earns from its assets like loans and the interest expense it pays on its liabilities like deposits. Think of a bank that pays 1% interest on your savings account but charges 5% interest on a mortgage. That 4% difference is the gross profit on that money. The bank then uses this profit to cover its operating costs, such as paying staff, buildings, and technology. And then they also generate shareholder profits. As for their risk management, this profit spread must also cover the risk that some borrowers will not repay their loans, a concept known as credit risk. Managing this risk is a core function of the bank. Their next revenue stream is fees and services. Banks offer a wide range of services beyond just lending, and these generate substantial income, often referred to as non-interest income. Some of these include account and transaction fees. These include monthly maintenance fees, overdraft fees when you spend more money than you have, and the ATM fees from using another bank's machine. Another type of secondary revenue stream is investment and wealth management fees. Larger banks often have divisions that manage investments, other financial advice, and broker securities for wealthy clients, and they in turn earn a commission as well as advisory fees. Another type of secondary revenue stream is credit and debit card interchange fees. When you use a credit or debit card, the bank that issued the card charges a small fee to the merchant's bank for processing this transaction. This small percentage is called an interchange fee and is a major source of revenue for the card issuing bank. The final type of secondary revenue stream is foreign exchange or forex fees. Banks charge a fee or a small margin when customers exchange one currency for another, such as when you're traveling or conducting international businesses. By performing these operations, banks do more than just make money. They are essential to the broader economy. They take money that would otherwise sit idle and channel it towards productive uses, like funding a small business, helping a family buy a home, or financing a student's education. This process of converting short-term deposits into long-term loans is called maturity transformation, and it's what keeps capital flowing and economic growth happening. Thank you for watching, and we will see you in the next video. Remember to subscribe. Bye.